Hi, Andrea Trout, Caliber Home Loans. So you currently own your own house, you've got a lot of equity in that house, but you're ready to sell and move up. We're gonna call your current house 1232 Small Street, and the new perfect house that you found is aptly named 123 Perfect Street. However, the sellers of Perfect Street are not willing to accept a contingent offer on you selling your house. But of course, you have that $100,000 in equity that you want to use as a down payment so that you can get a low interest rate and a low monthly payment on your new house. So how do we make this work? There are a couple different ways that you could purchase Perfect Street without having sold your current house. The first is through a refinance option. And that means you're going to buy the house using an FHA or conventional loan, make a low down payment, and then after the house sells, you would go back, refinance the loan, and take out a lower mortgage payment and lower loan balance. The downside, of course, to that is that you're going to pay fees associated with the refinance, and there's no guarantee what the rates are going to be once the house sells and you're able to refinance. The second option is this 80-15, and what that is it's really two loans. So you're going to take out two loans, one at 80% of the cost of the house, and then a second loan that you could pay off once you sell the house and have the proceeds. The downside of that option is that you will pay a slightly higher interest rate on that first trust loan because of the fact that you have a second mortgage associated with it. The third option is a little unique. It's something that we can offer here at Caliber Home Loans because we do service our loans, and it's called recasting. Recasting is really neat because it allows you to say, buy this house for $500,000, make a 5% down payment, which you could get from a gift or a 401k or however you want to come up with that 5%, buy the house. Now you've got a loan amount of $475,000. With principal and interest and mortgage insurance, that payment, not including your taxes and insurance, would be about $2,600 a month, which might be more than you really want as your payment. Now, you go to sell to Small Street, you make your $100,000 in equity, and you want to use that money to apply to your current mortgage. Typically, your options would be to either refinance and pay those costs, or you just apply that money and it doesn't change your monthly payment, it just changes the amount that you owe so that you pay the loan back faster. If you request a recast, what we're going to do is not only drop the mortgage insurance because you now have 20% equity, but we're also going to take your new loan balance of $390, spread it out over the remaining term of your loan, and actually lower the principal and interest. So in this particular instance, you would be dropping your payment from $2,600 to $2,000 a month. It is the lowest interest rate, lowest cost way for you to be able to buy this house without having sold your current house and get the payment that you want at the end of the day. If you have any questions about this or any other things about qualifying for a mortgage, you can reach me at 240-353-8206.